The relative strength index is a momentum indicator used in technical analysis, and it measures the speed and magnitude of a security's recent price changes to see if it's overvalued or undervalued. Essentially, it's a measure of how strong an asset is with respect to previous price action. Now, upon first glance of the RSI, it honestly looks like my heart rate does when I'm sweating at a 10-leg parlay. A lot of spikes with no reliable pattern. But upon further investigation, the RSI can actually tell us a lot about the price action of an asset and where it might be headed. If an asset has an RSI of over 70, then it's technically overbought. Conversely, if it has an RSI of under 30, then it's technically oversold. A common strategy is to go long on an asset when it's in the oversold region and to go short on it when it's in the overbought region. And we can see this in the Coinbase chart. So here we see that we have an RSI reaching the overbought region. So if we take an info line from this top here down to the local bottom, we see that the asset aggressively sold off after reaching the overbought region. So this would have been a good exit. We can also see this working for the oversold region as well. RSI dipped all the way down to about 19 here, and we can see that using that as a long entry indicator would have worked really well. However, going long or short just based on if the asset is in the oversold or the overbought region doesn't work all the time. For instance, if we go back in the price here a little bit, we can see that price declined pretty significantly and so did RSI, and we entered the oversold region. However, there was significant downside still left, so going long here wouldn't have been a great idea. Also, if we look up here, price rallied and so did RSI, so we entered the overbought region. However, there was still significant upside left, so going short here wouldn't have been a great idea either. This simple strategy is generally better than trading solely based on price action, but there's actually a better way to use this indicator called RSI divergence. Divergence occurs when the indicator moves in the opposite direction of price. For RSI, there are four types of divergences, comprised of bullish and bearish, as well as reversal and continuation setups. A bullish reversal divergence occurs when the price is making lower lows, but the RSI is making higher lows. This indicates that the sell-off the asset has been going through is losing steam and strength is returning to the asset, meaning that this downward move may reverse into an upside move. A bearish reversal divergence occurs when the price is making higher highs, but the RSI is making lower highs. This indicates that the upward move the asset has been making is losing steam because the RSI, which corresponds to strength, is making lower highs, meaning that this upward move may be over soon and we might enter a downside move soon. A bullish continuation divergence occurs when the price is making higher lows while the RSI is making lower lows. This means that this upward trend that the asset is on may continue because RSI is decreasing and it's getting further away from the overbought region while the price is increasing, meaning that both the price and RSI have room to run before reaching the overbought region. A bearish continuation divergence is the opposite, when price is making lower highs while RSI is making higher highs. This means that this downward trend that we're on may continue because RSI is going higher, giving it more room before it reaches the oversold region, so both the price and the RSI have room to go to the downside. This may be a little confusing at first, but an easy way to remember what to look for is for bullish divergences, we always look at the lows for both RSI and the price. And for bearish, we always look at the highs for both price and RSI. Also, for a divergence to occur in the first place, the price and the RSI have to be moving in opposite directions. Let's dive into a chart and see this in action. Looking at the Amazon chart, in the beginning we have an established downtrend, but then price makes a lower low while RSI makes a higher low, meaning that we have a bullish reversal divergence occurring. So what happens next is price sharply rises, then it sells off, but then it continues in this uptrend, meaning that this bullish reversal divergence played out. This uptrend continues until price makes a higher high, but RSI makes a lower high, meaning we have a bearish reversal divergence setup. This uptrend reverses into a downtrend, and the divergence correctly indicated when that was going to happen. In this downtrend, we see a bearish continuation setup whenever price makes a lower high, but RSI makes a higher high, and this divergence correctly indicated the sharp decline in price that ensued. After this downward move is over and price starts recovering to the upside, we see a bullish continuation setup whenever price makes a higher low, but RSI makes a lower low. This bullish indication plays out as price continues to the upside. The first takeaway is not that RSI divergence is some magical tool that will guarantee a certain move in price. That would be too easy, and markets aren't that nice. Rather, I view RSI divergence as an important indicator for supporting my hypothesis on where price will go, which is based on other reasons as well. Pairing RSI divergence with formations is powerful. For example, this upward channel formation has served as resistance on the top and support on the bottom. Also, we see that price made a higher low while RSI made a lower low, meaning that there's bullish continuation divergence. This channel by itself or the divergence by itself would not be very powerful, but since both indicate in tandem that this uptrend will continue, I think it's safe to hypothesize that price will move higher in the near term. Also, I'll be going over formations like this upward channel in depth in upcoming videos. RSI divergence is one of several tools that I use to support the wheel strategy, which is the main focus of this channel. Check out my tutorial on the wheel strategy if you haven't already. RSI is a staple of any technical analysis indicator suite, and I hope you learned something about it by watching this video. If you enjoyed watching, consider liking and subscribing, and I'll see you on the next one.